Hi, this is Jason with John L. Scott Real Estate. Hey, did you know that the interest rates dropped almost a full percentage points from last month to this month? This is your Seattle housing market update report for December of 2022. And real quick, if you can do me a favor and go ahead and like this video if you like this content, and hit the subscribe button so you can get updated each month when new content comes out. All right, so to get a good idea of the health of the real estate market, we like to look at the three key indicators, right? And the first one is the sales activity intensity scale. And what that is a measurement of kind of how quickly homes are selling. So it's the percentage of new listings that come onto the market that go into the pending status or, go under contract, go in mutual sell within the first 30 days of hitting the market. In Seattle, that's 38.8% of new listings that come on the market are going to go into that pending status in the first 30 days. So, according to the sales intensity scale, that's considered a strong market. So, if we take a look at the scale, what we see is between 30 and 40% is still a strong market. We consider a neutral market to be at 30%. So technically, we're still in a seller's market, even though a lot of the buy signs for buyers are so positive right now. But we're right there, kind of bordering that median level. So 40 to 50% is then considered very strong and on up the scale. Right now, we're sitting at a strong market, technically still a seller's market, but leaning towards buyers, and a lot of great reasons for buyers to go out there and take a look at the market right now. One of those is our second key indicator, which is interest rates. So interest rates have been going up, and pretty much every month I have to talk to you about how they've been going up. But this month I get to talk to you about how they're going down. So last month at the time of this shooting, we were at about 7.09% for interest rates. And at the time of this report, we're at 6.29. So almost a full percentage drop, which is pretty amazing. So now, how does that benefit you? So a couple things are going on. Like I mentioned, we're leaning towards that buyer's market. Not quite there, but we have seen increased inventory stuff sitting a little bit longer. What that means is that sometimes we can negotiate on behalf of our buyers and get a little bit of help from the seller in the form of seller credits. And then we can use those seller credits to do what's called a buy down. So you can do a temporary buy down, a 2-1 or a 3-2-1 buy down, which will give you a bigger discount up front. Not a discount, but a lower rate up front, and then a locked rate for the term of the 30 years. Or we can do a permanent buy down, which means we literally buy the interest rate down for the term of the 30-year fixed mortgage. And so with a permanent buy down, with the interest rates being at 6.29, we might even be able to get you into the five. So a lot of inventory. We can get some deals. We can get some concessions. We can maybe get your interest rates down into a very strong number. So anyway, some good stuff for buyers. And then the third key indicator is inventory level. So we like to measure the inventory level in months of supply, right? So it's roughly like how long it would take to sell out our inventory if no new buyers or no new listings came on the market. So in Seattle right now, it's 2.3 months of supply. So that is considered a low inventory level. As you can see by the scale below, 1 to 2 months is considered a shortage, and 2 to 3 months is considered low. And then a healthy market or a median market would be a roughly 3 to 4 months. So again, this is also indicating that we're still in a seller's market, but we're right on that. We're leaning, towards the buyer's direction right now here in December. So low inventory, and that's what's sort of keeping the prices buoyed a little bit. Although we have seen the average sales price is dropping a bit. And it might lead you to believe that, maybe people are losing equity or, value in their home. But what happened is that at the beginning of the year, we saw this huge price increase, what we call the premium pricing. And what we mean by that is that the demand was so much higher than the supply that people were willing to, bid up and create a premium pricing for homes. And so as we've seen now, that premium pricing is pretty much faded away. Where we're going to probably end up for the year, maybe just a slightly above where we started. Right now, I think we're at about 0.05% higher than where we started. So we'll probably end this year at about an even level, meaning that the home prices appreciated very drastically, and then they depreciated very drastically to kind of end the year right where they started. So that's kind of where prices are, and that's kind of what's happened for this year. Like I said, we're basically sort of in that in between area, both in sales activity intensity and inventory level, where we're bordering on a healthy market or a median market, but we're still leaning towards seller's market. So if you are thinking about selling right now in Seattle, you're still getting a very high average sales price. Homes are still selling pretty quickly, and there's not a whole lot of competition out there. And so, we got used to during those really crazy times. We got used to 0.2 months of supply, a decimal two, and now we're at 2.3. So we do have, 10 times more inventory than what we did have. But again, it's still considered low. So if you're looking to sell, still a pretty good time. If you're looking to buy, again, I've already kind of documented where we're at with that, and the interest rates kind of gone down, and so that's some good stuff. And there's a lot of cool programs out there. And if you're looking to buy and sell, it's always okay to buy and sell in the same market, because you're gonna either maybe buy a little high, but sell high, or you might sell a little bit low and then buy a little bit low. So either way, it sort of balances itself out. But right now, it's a good time for that, because there was a time where when we go to sell your house, and if you didn't have enough money to purchase the new home or your new destination before the home sold, the ability to guarantee or even possibly get you into a new home was kind of unlikely sometimes, right? As sometimes we were bidding on 10 to 15 homes. And so that process could take some time. And not only that, but sometimes we'd set up a MLS search, and there would literally be zero listings that matched, pretty broad searches. So, that's just not the case anymore. So we definitely have a lot more leeway. So that is what the numbers tell us right now. And this is your sale housing market update report. Thank you.